Welcome to EAGTAX and our tax advent calendar, where we'll be sharing tax tips and explanations in the lead up to Christmas. For day one, we begin with outlining the basics of reducing your income tax position. Once you've collated your various income sources together, the first set of tax reliefs to consider at point 1 includes certain losses, interest payments, and non-cash gifts to charitable organisations. Losses might be from a new business venture where you can carry these back and offset them against other income from the 3 preceding years, or capital losses from certain unlisted shares, such as those which qualify under the Enterprise Investment Scheme. Interest payments might be in respect of acquiring a shareholding in a private company, or in relation to a loan taken out to cover an inheritance tax liability. Non-cash gifts to charity which might qualify include listed shares, unit trusts and land. Your net income is then reduced further by allowances at point 2, such as your tax-free personal allowance. Remember, for married couples, 10% of the personal allowance can be transferred from one spouse to the other, so long as they are a basic rate taxpayer. For those earning over £100,000, the personal allowance begins to reduce. Once you've established the amount of income subject to tax, there are 2 key mechanisms to increase the tax thresholds, where income is initially subject to basic rate tax, then higher rate tax, and finally at the additional tax rate. Cash-based gift aid payments to charities and personal pension contributions have the effect of pushing income into those lower tax bands. There are also other small bands where income does not attract tax, such as a savings allowance, dividend allowance, property and trading allowance. The resulting tax liability can then be mitigated further by tax reducers at point 4. These include sophisticated investments such as SEIS, EIS and VCTs, where a percentage of the investment made is deducted from your income tax liability. For those born before the 6th of April 1935, there is a separate marriage allowance which can be applied at this stage. Lastly, we add on additional charges at point 5, which can include the high income child benefit charge for those in receipt of child benefit and earning over £50,000 and pension-based charges. Student loan repayments are calculated completely separately. We hope you found this useful. Please take a look at our website for more information and contact details at eagtax.co.uk.